Okay, just gonna share in the screen. Uh, what I'm gonna do is I'm gonna basically go through the 30 minutes and 15 minutes chart and throw in the aspect of why they are important, or how we can basically work along with them.
Okay.
So, rule of thumb, higher time frame still, think of higher time frame as things without the noises. I mean, like they carry less noises. They just project directional flow where the price is most likely intended to go. But if you want to track in between what's happening and how the position is progressing, or if you're sitting right, or is it time for you to counter up, or is it time for you to get out of the trade? 15 minutes and 30 minutes are like early, warning signs, or early, they acting as an early radar system. It lets you know a little bit in advance, a shift or continuation or whatever you're looking into it. And plus, it gives you, or it projects the patterns considerably earlier as compared to the bigger time frames. And what I did last week, mainly I kept confined to 15, 30 minutes, and I was going along with that, with that phase, just to give you a glimpse of you can actually use 15 and 30 minutes and you can still trade. So sometime when you're looking at a market which are slower, or the grind is not as healthy as you would expect to, 15 minutes or 30 minutes comes in, it gives you a series of support and resistance, and it gives you a projection on a target, which are considerably lesser as compared to the bigger time frame. But let's say if you can get into a habit of taking 10, 15, 20 pips based on a 15 or 30 minutes candle, then why not? You can be on the trades that you prefer to go along with, but in between, if you can have some other pairs on a shorter time from, and if you can grab maybe one or two trades, even for let's say 15 pips each, right? That's 30 pips being put down into your kitty bank. So what's wrong with that? There's nothing wrong with that. So it comes down to the phase that how we're going to do it, and how to do it more, actively in a way that it is in the end profitable. So I'm just going to go start doing some random charting on some random pairs. Uh, my chart open up on pound yen. So I'm just going to go and see, uh, tell you, what we look for and how we do. First thing first, whenever you want a shorter time frame chart, right? Get into a habit of getting to know the, short-term trend or the flow of the markets. So one look at the chart gives you an impression. It surges and then it drops. It surges, then it drops. It surges and then it drops. So one way to look at it, if this was a peak point on this chart, right? It could be another peak point somewhere else, but I'm looking at the candles that I can fit into the time frame that I have, which is roughly about 200 candles. Out of those 200 candles, the flow is from made a top, and then another top, then another top, then lows, then came back and briefly went over this and started coming down. So one the glimpse that it gives you is that the trend is on the lower side. All right. So that's the first thing that you get looking at a chart like that. But do you base your flow or direction of a pair based on 30 minutes with this thing? You can probably do that as long as you got an overall view based on your 8 hours or dailies or a bigger time frame. Let's say, example, you, let's say Rosa, you going in and you projecting that your bigger time frame is suggesting that 126.10 or the low that was printed on Friday was not enough, and then you got a flow of another 100 pips or 200 pips. So basically, if you have that view and you are onto that track, you would be you will be selling the rallies, unless you feel that it's time that it needs to counter up, or I can have an extension play, maybe match up this high or whatever, right? So when you go with a 30 minutes time frame, and let's say if I want to make it support and resistance, this would be my first impact, right? So I would go resistance on this play because if I look at the price action from here to here, it gives me a projection of possible inverse head and shoulder, right? So with that in view, if I have this as a possible neckline, let's say this being possible neckline, right? I was short with the mindset that it is coming down to put in a right shoulder. So maybe with that in view, I would have gone something in this manner. What I'm trying to do is try to grab the last swing lows and if I can plot a trend line. So, this would have been my target out here that I'm giving you an impression of what I would have done, what I would have done in real time. Head down here, I would have gone short, right? With the view that the, you know, pattern may have signaling shift in direction. That's mean we can get it looks like an inverse head and shoulder, right? So it can come down here, and from here I'll opt for buys. That if we break, we go. That's mean we take out this high, and then projection goes in, right? So what it does is that it gives you an impression that shorter time frame, while it can still be bearish, but then probably it's time that we might just go and extend the highs out here. So it has given me an idea of what I'm looking at. It has given me an idea of how I can go and set into a position ahead of time. Regardless of that, I have a short position coming in, right? I would have ideal target out here. Anyways, it came down, it's swing back up within, I would say, half an hour, so maybe like 3-4 hours play. Again, it held back. So normally, this is important. If you have a neckline, it's already tested, the right shoulder did not come as far as you intended to be, and then it swing like it curved up, it U'd up, it the rounded top, the rounded bottom started coming in. Now it started giving an impression that we're just gonna blow up, right? We're gonna blow on the higher side. So that's me. I have an option looking at this base before it actually came down here. My safest thing would have been to place my stops on even. If I've done some profit taking, I'm not getting into those details, how you should trade or how you should not trade. I'll leave it to your discretion. I'm just telling you how you can maximize your efforts looking into the charting that you have done, right? So when it's curving and I'm looking at it, right, I've got an impression that it can blow up. So now I've got a choice, where I take my break even. Do I go for buys or wait? Actually, best thing would be to wait the blowout and then go into buys. And that would still be, you, it came back up, you probably would have got stopped on even or maybe two. What we do is 0.2, 0.3 pips on the profit, stop on the profit, uh, wait for here, had it broken up, wait for one retrace back, and then get back into the longs. Because your projection will be from here, which is 126.60, up to here, which is about 127.60, so roughly about 100 pips on the higher side. So if I get in buy somewhere around 127.70, I still won't consider 100 pips. I probably would consider about 65, 70, 75, 80, up to 80 pips. So I probably would have a target of 128, 40, 45, 50, something like that. Anyways, what happened was that it did not break. It started declining. So I still would have been thinking that it might just swing back here and come back. But by the time it started taking out these lows, then I know that we are back to this track. So now I've got an option to go and sell under this low, right? Or wait for it to hit down here and go for buys. So I'll leave it to your discretion. I'm not going to go in details with that. And this is easy. You can actually plot a trend line here. You can actually plot a trend line here where you got a break, right? You can actually plot a trend line here. So either you go under this low or you go under this break is up to you. Anyways, It came down here, I would have definitely got a buy here. If I'm looking into this chart and I'm still interested, I would have been looking to get into buys here. But normally, when you see a head and shoulder, when the neckline has been tested and it's coming down for a right shoulder, let's say in this case, if it would have bounced back up here, that would have been immature or not a full right shoulder. Anyways, the pattern overall holds it. That's when this low signifies that it is in a hurry. This is how I put it. That this is in a hurry to go back on the higher side. So, anyways, we coming down here. We coming down here. I've got a buys here. Right now, I know what I need to go. If I need to look for an add to the position, I would add if the price goes and closes on the higher side, maybe one push on the lower side here, get back and on an add and look for a swing here, maybe get a deflection here and then break out, right? If it comes back here anytime sooner before hitting the main target, I would be looking to add back into a position and carry again. Long story short, it did not happen, right? So it's like it rejected here, came back out here, and eventually, I probably would not have made any money here because I would have been very fortified that it's going to be on the long side. So I would have lost stop out here. But once it broken it, then I know I don't have a right shoulder. I don't have a position on hand for a long side. I need to go with the overall trend and I'll go short. So what the target is, you can use it like it broke here, came back here, I would have gone short here. If I'm interested in this, I'm just telling you to play on the base on 30 minutes, right? Now what you need to figure out is that this is noises. You go short here, you probably, you're looking at for a move at least another 15, 20 pips. You didn't get it, you probably would have got out probably one plus one, plus two, right? Here you're waiting for a breakout. It did not happen. It dropped in. It gave you a chance to probably go back in to sell if you were interested and go back all the way down here, right? Which again would not be possible because you already got a hit here. There was no retrace on this candle. So you had a buy, then you had a sell, right? So I would have had a buy, not a sell, because this was too fast. There was no pullbacks, and it just came and hit that base. So I had a pullback. I mean, I had a buy scenario here. I would have bought it. I again would not have made any money out of it because knowing myself, I would have been waiting for it to break on the higher side, get a later push down there, and add for it to go and do this. It didn't do that. So I would not have made money on this sell. I would not have made money on this buy, right? I would have seen the break. I would have sold back here. Got a close higher, but a follow through down here, then I would have carried it. So basically, I would have carried all the way down here. I mean, depending if I have a system in hand. Now, with this thing over, what you should do is that whenever you see moves like this, whenever you see moves like this, you need to be getting into projection, putting on trend line like like this. This would be D4, something like this. It gives you a projection, and I'm going to show you. Maybe this chart is not very clear on with this trend line, but I would have gone something like in this fashion, right? I'll tell you when I see a proper chart. I'll tell you, and it will tell you. You will know what I mean by that. All right. So the impression with the one time frame is that it carries noises, right? So your first, what I'm trying to, the reason I'm projecting this chart is that I want to show you what kind of territory you're coming into. So if I ask you a blunt question, what is the chart projecting, or kind of tips that it's giving you? Let's say you go short here, which is my T1, 127.58. So let's say 56, 57, or 58 is my sell. It dropped down till 27. So it pretty much dropped down about what 30 pips, right? From, let's say, from 57 down to 27. That's 30 pips right there, right? So, and then again, with this break, with this break, heading down here, the low is T2, 126.98. So let's say 127. The swing back was about 127.35. So roughly about 35 pips again. 30 pips on the down, 35 pips on the way back up. So let's say if I'm not grinding in or if I'm not setting in for a bigger move, you have 30 pips. By all means, it's a decent amount of flow. It's a decent amount of pips. So let's say you got about, you trading this 15 or 30 minutes channel and you getting into a habit of, let's say taking 10 pips or 15 pips. Let's say 15, 10 to 15 pips. So, you'll get those. You'll get those. Here, it's a different scenario because here, your overall scenario has changed that this is, you cannot treat that as a inverse head and shoulder. So you'll treat it as an overall trend, which based on the candles that we have already fed in, is on the bear side. So you just go sell, and then if you have a bigger time frame chart, whatever your targets are, you can go and proceed with that. And these actually is T2 again is 126.95. So let's say you had a sell 93, 94, 95, hitting a low of 126.12. So that's about 80, 85 pips on a drop. So there's another big move out here. Again, similarly, as soon as it closes above, it's a time to go buy. So as of right now, basically, this 30-minute shift telling me against this trend line, I should be a buyer. So this is a glimpse of how you go. I'm not projecting it along with a 2 hours or a 4 hour chart because I don't want, when you look at charts like that, you do not look, let's say if you're coming down for a scalping mode, you do not match it with the bigger time frame because bigger time frame again carries lesser noises. So straight out big flow of maybe 200 pips or 300 pips, and then we all know it's never a straight line. So if you can start projecting, if you can start getting into habit of plotting 30 minutes, then do so, and then start making your own assumption like what are the, how you plotting is different than how I plot. In the end, it will be different. All of us will come in differently. Maybe I'm taking these points, you might take some other points, you'll get some uh, other levels, but overall the projection will be the same because to your mind, below it is a sell, above it is a buy. All right. Now, one more thing that I want to tell you about. When you using a 4 hour, sorry, when you're using a 15 minutes or 30 minutes, let's say we go on to a 15 minutes chart. When you're using these charts, right, your overall aim should be is not to go and look for the tops, like you will project the top, something like this, right? Actually, this is correct, right? You can do that. You can do that if it's a if it's a good looking trend line and if it's very smooth. Otherwise, where I usually use my 15 or 30 minutes is I plot breakouts. I basically plot breakouts. When I say I plot breakout, is that let's say you have this, you probably would have got the same thing on a high time frame also. Let's say, yeah, actually I have it. You would have got the same thing on a high time frame also, right? So that's what I mean by don't try to go and look for tops or look for bottoms based on this. But what your plays are is to look for breakouts. So if I go with the same flow, my next breakout, or if let's say I want to see how far this can swing back up, I'll look for another breakout, probably about this, right? So when it comes down to it, I'll change that. So now my view has shifted that even though this is a breakpoint, but now I've shifted that, it has actually broken down under the wedge. So with this in mind, I have a projection, I have a play in mind. I have a play in mind that if this swings back up here, back to here, first instant, I have a short scenario. First instant, I have a short scenario. This is just a play that I'm telling you how you can maximize your gains. But what you need to do on these charts is instead of going for looking for tops or bottoms, you can actually do that. I'm not saying you cannot do that. But if you want to have a maximum effect, then you look for breakouts. And the best thing is that, uh, like, instead of digging around how far it can go, dig around how far it can come back up. Actually, you would have got a shot here, right here. You actually would have got a shot back here at this point, you know. And what I'm doing is I'm only projecting a breakout trend lines. That's mean all I'm doing here in this chart is nothing more than ignoring these two, ignoring these two. I mean, I'm ignoring. I'm basically trying to match, connect. What matters to me is that this point, and then a huge drop and come back and hit back from that and give you a shot. The same thing. I think I send you on a dollar yen. Sorry, on a dollar yen and a euro dollar. The euro dollar is up to a resistance, and pound, sorry, dollar yen is a resistance, which automatically indicates that euro yen is prime for a shot. Indirectly or directly, it's a prime for shot. And actually, I think euro Japanese fell down from there another 60, 70 pips and actually posted a new low. But my point is, you're looking for breakout. So what is your breakout on the lower side? If this is true, has the target been fulfilled or has got more to go? So I'll tell you what I'll be looking for would be something, a trend line that can probably grab this, a trend line that can probably grab this, and ideally it grabs this or this. I cannot be very choosy, but I'll see where I get the best results. So I'll probably, with this thing, I get this. So either this is my one, or I can use the lower bottoms, as in this. So they both will come in correctly. So what I mean to say is that had we been trending, had we been actually, it was a moving market, you I mean, at least me, I'll look for T2 or T3. If I'm doing it manually, I'll try to wait for it to come down maybe another 4 pips lower than this to get into buys, but I will definitely go for buys here. Because to me, if there's a swing coming back, matching this high, it has to be from this zone, right? So this is how I'm gonna go use my 15 minute, 30 minutes. I'm only looking for breakouts. So from here, my breakout, I'm trying to take a guess. The breakout either is from here, that's been the downward shifted back from here, or was it from, actually here, right? So the the proximity of both the levels is very close by. So I can use either one of them. It's like 3, 4 pips. It really doesn't matter. Really does not matter because if I'm right, and you know, if I'm right means, I probably would be projecting this move, right? But in reality, I know I can have trouble all the way somewhere around here, or maybe let's see if we can do it actually. What happens? Actually, I can use the same thing. Yeah, this would be roughly my halfway zone. That's mean if I ignite buys, say 70, 74, I'll be looking again for about 25, 26 pips on the move. Then a break would just gives me an indication that we can go and hit back out here. So this would be my play. And if it closes underneath, sorry, if it closes, under here, I'll look to go back on selling. Probably get some. You'll probably find some trend line on a higher time frame that might come down here. So then this becomes your trading around 126.70 to probably about 80 pips. Anyways, what you what you're basically doing is going from one breakout to another breakout. This is your play. If I have to tell you in one word that what you need to do with the 15 or 30 minutes candle, then what you're looking for is two break plays. If you can get two break plays, that's what your game plan is. That's mean play a swing between those two. If not, then let's say considering the same chart, let's say actually. Let's say we don't even have this trend line, right? Let's say the price has just broken down here and you have just gone short here and the price has dropped only till here and it has come back already. That's mean this price never happened. This price never happened. That's mean it does give you impression it's retesting here. You can again go short, but you do not have a lower target, right? So you do not have a lower target. This is where you need to work out your experience. This is where you need to work out your expertise. That on a higher probability, it gives you 15 pips, it gives you 20 pips, it gives you 30 pips. What it gives you is your profit limit by default. So this is something that you need to work on. But all you gotta do is every time that I've thrown in a 15 or 30 minutes chart, I've mainly projected a breakout spot that this is where the breakout is, this is where a retest is coming in, this is where my interest lies in. That's mean if this is a breakout on the lower side, retest, I'll look for a shot. If it closes above, then I'll ship then I'm in I can be in a, what do you call that? I can use an option to go and switch myself. Now, let's take you know, let's make it simpler. Let's go on year. Let's say 30 minutes. I'm gonna put you guys on mute for 1 second of our call.
Okay.
Yeah, one of the habits. Now, this is more. The difference between the pound yen and this chart is that somebody is riding a bike without any silencer. I can tell you that. The difference between this chart and the pound yen is simple. This there are a lot of weeks. I mean, a lot of spikes candles to work with. But I hear it's much more smoother. I mean, I can just have a look and I can, uh, you can have a feel on that. So one way to do it, one way to do it, right? It's I think probably this. And I think most of you already do that, right? Now this is normally what I would do is I'll take a parallel candle, I'll put it, but when I'm working with 30 minutes or things like that, this thing does not come in like that. And the assumption is the same thing that every time it's hitting here, it's provoking bounces, right? Normally you got one connection, you got two connection, and now this is like going a little bit more advanced into a 30 minutes chart and seeing, you know, um, it's like putting yourself into self belief that this is a probable move that's going to come into play. Now you got a starting point, you got a second connection, and this is where you start flirting and giving an indication that this is a good trend line. So that's mean every time it bounces here, it's going in for retraces. Now what happened is that once you got start, you connect. Once you start getting confirmation, normally what price does is that it's try to put up a base on here. So what I'm trying to say is that based on this thing and what I've seen again and again, is that price will come down. It will try to form a bottom line here. That's mean you can get a new low, right? But before it goes and hit down here, it probably will try to go and swing back up, right? It probably will go. That's when it's trying to base itself. Nothing more than trying to put a base on here for a lift off. Now, whether the lift off is going to be, I'm not going to go in that detail that you buy or you sell, but something that you can look forward to is like if you get a swing and the swing, makes a top somewhere and it gets, choppy again or it starts consolidating. And let's say if the consolidation has got a grind on the lower side, that's mean, that's mean sooner or later we're going to have the same play back here, hit back here, and then it's going to break and it's going to carry on with the same thing and it's going to hit the same thing again. But when it hits the same thing again, This is a difference. This is a difference. No, this is. I'm not saying these are the plays. I'm saying this is the things which I'm seeing again and again, again and again. All right. So let's say hits here, it goes somewhere around here. Then it goes zigzag. It goes zigzag. It goes like this, and then that's mean tops are getting heavier, right? Tops are getting heavier, and it's coming for this. So what it'll do that, either it bounces back. That bounce means it needs to take out this high now. Otherwise, you will break here, you will hit back here. Coming on the way back, then this becomes your resistance. Your support has already become your resistance. This is the time where you can start looking if there's a drop again, it will something break under. And if this breaks under, it's a very powerful statement. It's a very powerful statement. Next drops are severe and they extend. They will extend beyond your targets. This is all I can tell you. This is something you need to start observing. And I know all of you, you plot this kind of trend lines, right? It's time now to start observing the place when the thing closes under what happened. It just goes nuts. It just goes berserk. Anyways, coming back to our play on how we do 30 minutes, right? Let's say this was your candle. Actually, here's what I mean by a trend line like that. I think this would have been your play. Consider this, consider this, consider this exactly as this trend line, right? It's just that this is quite heavily inclining, right? But the effect you get once the price is maintaining above, closes under, then this drop. I mean, from here to here, probably you got 100 candles, but from here to here, you got only about 20, 25 candles. That's what the difference is. Basically, the next move becomes about, I would say, about 300 times or 400 times faster than whatever that was happening here. So here, there was nothing but consolidation. There was nothing but consolidation. It coming down, hitting here, trying to go, hitting here, trying to go back. Then, of course, ECB news, and then boom. And then it's been going on the lower side. It's just that it's starting to find a base. Again, I know, and I've mentioned 108.60 yesterday is going to come into play. So there's a support out there. I know that, but what I'm trying to tell you is that do not mix yourself with bigger plays because I want you to stay affixed to the time frame that you're looking for, and your mind should be working based on a nature of a pair. Some pairs are fast movers, some pairs are slow movers. You know that, right? Crosses move fast, uh, majors they move slow. So how are you gonna play your base? What you try and do is nothing more than you're not going into looking into too deeper or going for your trades into a very deeper mode. All you try and do is that if you can do something extra, if you can put in a little bit more effort, can you go and grab yourself another extra 10 pips? So two of those spotting, can you grab yourself 20 pips? And these are relatively safe play. So a full bounce, let's say it does end up putting a base here, right? Let's say that hits down here, it goes up for a bounce, right? So it probably will do something like this, right? Let's say it drops in again, back in, and this is what you're looking for. Come back here, then this automatically becomes, regardless of whatever happens, unless it's a very NFP or ECB, and there's nothing coming up anytime sooner. So from here, whenever it comes back to this trend line, you go short. So now the scenario changes are here onto this trend line. Let's say you were right that the base is coming down here, right? You gotta move like that. Let's say it broke this, right? And head back. Now, this is not your main trend line. Your main trend line is this break trend line. So right now, the price has already corrected from a fallout, and it's on a correction mode, and is hitting back on the same support tunnel resistance, the bigger one. So either the correction ends here, right? Which means if the correction is ending, then it's coming down again on the same trend line, wherever it is, right? It's going to come in like that. That's mean it's going to break this, come down here, hit back here, maybe grind around and break it, then do and then come back, or it moves back from here again, hits you here, and then counters up. No, that's a different story. But what I'm trying to show you is that there's ways for you to find out based on a 5 minute story, based on a 15 or 30 minutes chart, right? It's just that it's giving me an early warning. But the characteristic of prices, the plays of prices, I know because I've been watching the charts again and again, again and again. So I know, I'm just going with the higher probable clauses where things can give me maximum point of pips, and where I need to enter, where I need not to enter. Now, this is just what do you call that? Play on 30 minutes, but overall, you know, you can use the same structure on other time frame also. It's just that the bigger time frame will carry lesser noises, but it will carry higher pip count. That's how it goes in. Now, now, what did I send you? Let's see something that I sent you.
Striker, can I just ask, because I've got the Great British Pound CAD 15-minute chart that you sent over, and that's one where you did
Yeah.
almost 1,000 or 100 pips on it.
Yeah.
That was on
Can
Wednesday
you?
the 19th. It's the pound,
This one.
pound CAD 15 minutes one. You did the buy and the sell on that.
I don't even have the 50. Uh, okay. We can make room. We can make room.
You had
Yeah,
support
there
around
was
the 160, 600 and resistance.
this one. The buys here.
Yeah, you had that around the 160, 600 area, which is pretty much, because this is going back to a Wednesday, so if you were to go forward, that would be correct. And your T2,
That would have been 19.
19th, yeah. And
You mean
your resistance was at 161, just over 161, 400.
1614? That would be right here or right here. Was that a short play?
You played the short and the long. You bought and sold on that one.
Do you have a chart here?
I probably have it in the Skype messages on the Wednesday the 19th.
Wednesday. 19th. Wednesday. Okay. This one?
It's the Great British Pound CAD. Yeah, that's the
Yeah,
one.
this one.
Yeah, Great British Pound.
This is pound Aussie. This one. Yeah. I remember this.
This is
This was
it.
a
Great,
sweet
that's
play.
the one.
This was a sweet. This is.
You
This
played
is.
that to the long side and the short side. You said I printed it out and put some notes on it. Um,
Yeah, this was from this angle. Yeah. Yeah. which is, all right, consider this chart.
And your
This is
support, that's
one,
it, came in at
one.
160.
Now, in our world, isn't that a play from breakout to breakout? This is already done. This is already done. So your cheeky point is a short, right? This is a baseline. This is the same baseline I'm talking about. I was talking about right here.
Yeah.
I did not save it. This is the baseline, like here, right? The second one was earlier support, now becoming a resistance. Which one we did? We did this. Yeah. This actually is better actually. This is nothing. This is the one that I was just suggesting is exactly that Jeep, that pound 15. That is, first of all, you're trying to look for a base here. This base corresponds to this base. There's no difference. Here, the only play is that I know where it broke off.
Striker, sorry, the sound is distorted.
I have a target in mind.
Okay.
Target, save chance. Okay. I said, can you hear me now?
Yeah, that's clear now. It just was a little bit distorted for a little while, but that's
Yeah, I was talking from far off. That's why.
okay.
Here, what I'm saying is that here I have a precise target. That's mean, if I find this, if this ends up becoming my base, this is my target, which is the same thing. Here, if this ends up becoming your base, right? Your target is the breakout point on the higher side. My fair guess would be this would be your. Actually, it's already done it. This is the one that I think I sent you across. This has already done it. Maybe a few point here and here. So that's when it is now relying between two breakpoints. So if it does not break it, it's going to come a retest here. Here, based on this, upside break here you play. From here, I would have gone shot further up because if you look at the structure, it's forming a support, it's forming a declining support, one decline after another, but actually it's rejecting. This is the correction is ending. So the correction ended. It gave me a newer lower than this, which is the same thing I'm mentioning here on the 30 minutes on this chart or on this chart. Unless you get a further break in, then the next move will be faster. Now, what we're gonna see is that where did it actually broke on that day on pound Canadian. Yeah, it broke under, right? It actually broke under. Now I'm just gonna need to copy that chart. I think this was it. Yeah, this was it. Yeah, this is the exact view. This is what I'm saying. The reason I would have been focused more on the lower side, right, is simple because actual break is on the higher side. Here we just have a declining supporting. The support is declining, so it gives you an impression that this is the short. And as I said, when it counts back in, then you move along. Overall, when it came down all the way back here with this low end, the scenario changes because now it's pointing down as an inverse head and shoulder. That's why the very next day I had another chart to go for a buy here. If you remember, I think that would be Thursday. G 6210. Yeah, 6210 or around top resistance should be support. here. This one, yeah. This point actually, which is this point, which is nothing more than, which is nothing more than, which is nothing more than if you can find yourself these views, these trend lines, you are golden every time. Well, I will say you're golden 90% of the time, right? Something like this. It's just that it broke here, came back on the same trend line. This is the time it retested. At 61 actually, because I was pointing maybe here, but it came down a bit lower. A bit lower means it just basically it was delayed. So the declining 6100, 6110 became 6100. I still remember we had 610. We had we had 61 has buys here, and then this is what the price did it because your target would have been at least a bit higher than this, which already came in, but then kept on going on the higher side till this is the same trend line actually coming in, which gave you sell here, it gave you sell here, gave you sell here, and this is where it based up, been topped up. It gave you a decline, and then we saw what happened yesterday. Yesterday was this is where the news came in on the this is where the news came in on the retail sale, then it became a different story. But uh, you know, when I told you guys this thing, I was doing nothing then. Again, it's the same thing that I watch again and again. So it's like basing yourself into a play prior to it happening. And this is how we got in about 100 pips out here. It's just that you felt it that these are fake. This is a fake. This is the fake break on the higher side because there was no follow through, right? And the bottom started curving. And I told you once it breaks, it's going to drop in. Had it not been for the news, I don't see any reason why we would not have touched 60, 70, 60, 80. And yeah, on the way back up, it did hurt us a bit. But overall, it was still okay. We got a bit heavy from 62.40, but then I'm still glad that we chopped it off. I still think we're gonna fall in on pound Canadian. On pound Canadian, it's gonna do one more move down before it goes back up, probably 6,400. And the same thing, the 15 minutes or 30 minutes or 4 hours, the same thing. You're just using one break point to another break point, one break point to another break point. So if you put the same thing, let's say on, how about NZD? NZD, new chart. Yeah, just looking at it is so simple. Just looking at it is so simple. I would have gone with this thing and then break. Actually, this. Yeah, just ignore this spike. Is there any move back up? No. Your impression is that any move back up? Okay, what happens if you do this? You see what I mean?
Yeah, we've
Do the
got
same
it
thing on
down
Europe.
there, haven't we?
When things are heavily declining, you can get yourself a trend line that ends up being your targets and your swing point. Now the question is that if it's going to base itself here. So if it bases itself here, then this is your play. It will just become simpler and simpler. It just becomes simpler and simpler. This is how it's going to come up, pretty much around here. So unless we're breaking on the higher side, let's say if it breaks on the higher side, the target back. Now, when we go back on the target, I'm going to use this swing point with this trend line. So actually, I'm going to change it a bit. I'm going to see if I can get something better on a view. Not here. Yeah, I can actually use this unless I get a full. So that's mean if we start breaking on the higher side, let's say I won't call this a bull flag because it's, the formation is such, but then the reason is that bull flag needs to be at the top of the range, not at the bottom. But what is the good thing is that it's not a bear flag. Had it been a bear flag, then things would have been different. Things would have been different, right? I probably would have been looking not to break on the higher side, but rather for it to break on the lower side. So from here, you can probably get another swing down here because we are on the weekends. We can get a gap, something like that. But if it starts holding here, then your short-term play is back towards here, or a break. And I think if it carries on, then this is what it's going to come back into it. It's the same thing as let's say if I can do this into another time frame, which is the same thing, almost a base. Probably can throw in this. I don't rely on these. It would be good if you're looking and if you've already bought and you're looking as scalp target. That's something else. But I don't. The tops they don't. I've experienced that. You know they can flirt around, so I don't consider them. But what I do is that I would rather go this and start looking for something in proportional to this works more better in terms of projecting breaks than looking at something else. So which becomes basically this. And that's mean upside on this could be quite fruitful. Uh, take it back from here. Yeah, I will go with that hypothetically. This you can always go for the longer time frame also. Again, this the weight it carries, you're pretty much better off than going with the higher time frame. So from here, from this perspective, I can probably use 15 minutes, and I can actually go for another target. Look for a target if I've got a base break here. Yeah, something like that. Yeah, actually, my short-term play will be something on these lines. That's mean even if it breaks on the higher side, you still get. I can tell you right now, 71. Actually, let's say for Asia, probably about I will say up to 71.90. For European session, up to close to 7,200. So that's been between 71.85 and if it keep on progressing into a later session, up to 7,200 would be your selling points. That's mean I might just go in into the European session if I come in. If I see somewhere around here, I will probably be interested to go and sell it. Because again, it becomes healthier from my point of view. What I'm looking at is that risk to reward becomes pretty good, pretty decent. Because if it starts holding here before it even shoots up higher, I think it can do one more swing back here. Because overall, with the projection of dollar and rates increment, and all others are looking for rates decrement, so that's a big boost for the dollar. And I think on a bigger time frame, New Zealand and New Zealand, this is a head and shoulder breakout. It's pretty much tested and rejected. So I think overall direction again is still lower. it's coming down for 69.75.
Striker,
So
can I just ask a question on the 15-minute time frame? Um, if would you wait like at support or resistance if you're looking, say, at resistance for a short trade? Would you wait for a couple of 15-minute candle closes, or how would you sort of be confident that you can go
the
short?
more the more and more you look into it, right? Let's say, I told you not to look in perspective with a higher time frame, but if you got a sense of overall direction, then you know things in advance. You can sense, you can give yourself a probability clause that it's actually gonna break it. It's not gonna break it. You know what I mean?
Yeah.
So I been aggressive. Let's say if I short here, though I'm telling you you can maintain a sell down till here, but knowing myself, I think this would become my play a bit. That coming week, if 72 or around those levels, let's say it goes here, it comes down here, swings back here. Every time it comes back around here, I'll be a seller. And this would be a mean for profit, swing, get back into shorts without even seeing if it can come back or not, because this is where if I've done some profit taking on the move and I'm adding back, I'll be aggressive because I think it's gonna do this, and then break it and carry on. That's me. But I'm not suggesting that to you because what I figure, I mean, what my mindset is that if I've showed you something, you need to back test it, and the best back test is not that what I show you. Back the best back testing is what you can go and start doing your own. Because you need to start seeing the things, working on your trend lines, so it becomes something like history repeating itself. So when you see the same thing next time, you get a better view. When you see it third time, you get an even better view. So when you see it 15, 20 times on different pairs again and again, you know how to process. You will become much more disciplined. You will know when to cut yourself off for 5 pips on a loss, or when to take your 5 pip profit and not wait for the 6 pip. So it just gets you more proactive into trading, proactive in a way where you'll be more progressive into being more profitable. So that's
Okay.
what I mean by
Yeah.
that.
No, I understand that. Thank you.
Because most of the thing I can tell you to a certain extent, but not till it becomes your own learning curve. Not till that time it will help you. You will know. You probably can relate to it what I'm talking about. You probably have seen it, but not till you have done your own charts, not till you have done your own lines, and not till you have seen the effect, because once you do your lines you already have a projection, right? You
Yeah.
already have a mind frame that this is how the price is going to act, and the rest is if the price is acting on it or not. Like pound, I was told you guys that 2170 will be coming in, and after that, you know it could I still I think it's a still think that it's a bear flag, still think it's a bear flag, but not till it actually does it. I'm not gonna force myself. Yeah, it's a good play. Selling here, bringing it back towards 2170 is one thing. Now, for it to be in a bear flag, you need a break, right? Otherwise, caution. You can get another swing back towards 2320, 23, 2310, 23. These numbers can come back into play. That would be your next shorting zone. Now, if it start breaking on the higher side, then this is not even though it looks like a bear flag, but it could just be a bullish channel because you're looking from lowest point of impact. From here, let's say lower than a higher low, then a higher low, then you need to break on the higher side. So the only thing missing in this equation is a break under. So then you can take out this low. So the same thing on 30 minutes shorting zones, and actually I think you can project the low here. These things are comes in playing effect. I don't know. This is a very choppy zone. you know, then it becomes a bit tough. So even though, I mean, on the higher side, I think you can probably grab your silver breakout somewhere around here. Yeah, this could be your breakout. So if it's shooting up, then I think something on it can come down something on this line, unless you can do a better angle on that. It's just that from where I'm looking at, things are very choppy. So I might not get a very decent trend line. Could be, yeah, actually this one. That's inclining way too higher. But if I can get something from here, and get down into here, that's what I'm looking at. Yeah, it's just it's choppy. Might have to rely with this thing. So come back towards here. Let's say 23, 20, 23, 25, 30, around that vicinity. On the European session, that would be your shorting zones. That is if it continues lingering on the higher side. Because to me, it's still a bear flag. To me, it's still a bear flag. What is the 15 minutes on pound looking at? Nothing too much of a difference. Probably the same thing. Maybe here. I will use this as a break on the higher side. So 22, maybe 22.40 around 22.40, 45 would be an initial break point. So that would be your initial shorting zones. Unless you can use, you can grab yourself a breakout point. You probably can.
Sorry, the sound's a bit low again.
Yeah, I said unless you can grab yourself a breaking point, a breakout trend line.
Yeah.
Let's say, let's say, again, the price is a bit choppy, so you won't get a very clean, nice effect. But I think I can still work with this.
Right, so if you get a choppy chart like that, would you just move on to a more clearer chart?
Yeah, that is true. That is true. What if we can get something on the hourly? Hourly, actually, yeah, this was.
The chart.
You can, I mean, I'm not saying stick to, yeah, when it's choppy, either leave it or go with the time frame. But then, I would guess there, yeah, still 22, 40 something will be your initial. I'm not gonna, I don't count with this thing, as I told you. I probably would go with this thing. Even though it's a bit choppy, it's just that, you know, you still have a view of a bear flag, so you should not go higher too much. So first instance, I think 22, 40, 45 will give it a tough fight out here. Maybe do another one and then wrap the. How's Aussie looking? The main thing that you need to look is trend lines, which are basically, yeah, basically like this. The breakouts. And then this is another way to do it. If you got this as a break line, you know, get into habit of actually, yeah. You got this breakout, just duplicate the same trend line C, around this zone. Yeah, take out these two lots. So yeah, this would be supporting zone. You can do this also. It just gives you an impression that if I'm probably looking because from here to here, this price becomes fake, right? So this is valid. So that's mean you can probably have a new minor low here, 75.80, start supporting, and you got a buy point. Initial, I would say, initially, this will come down, something like this. So these are your 75.8. You got 40 pips swing initially. A break again about 40 pips. So this it gives you an impression that Aussie works in a tandem of 40 pips, at least from where we are right now. But you should go for a trend line like this, and then again, you can probably do. Yeah, most likely it's not done it. Actually, 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 because I got this trend line. What happened if I do this? Yeah, well, it's been choppy. So I still think it's going to come down a bit lower, but then probably a bounce of 40 pips. So 76.20 can be back into play, something in this format. Which is nothing more than this break did not retested it, fell back, and again, so overall direction is still short. So I would be short. I will be looking for a reason to go short on this pair. How is it looking on 15 minutes? So from 15 minutes perspective, this is the break right here. Yeah, actually I like this angle better. That's mean I'm not gonna go too far up. Maybe up to 66, 76, 40. Yeah, that would be your sell points out here. I think it's still coming down on the lower side. But the whole idea is that, you know, and I'll be projecting and I'll be throwing in more and more, uh, let's say, let's say this is the 15 minutes, right? Actually, you can use a simple up top, yeah. Right here. Your hypothetical target, if it follows through, will be the same trend line. You bring it down here, which actually, which actually did the low also. But this was on the closing, so I don't know if this is this body is correct. It was last 5 minutes sold out, I think. Yeah, last 5 minutes. So I don't know if it's real, but I think you got a support here. Again, it's not a bull channel because it's at the bottom of the range, but the same assumption. What happens if you do this? You would have got yourself a decent buy point right here. So yeah, this is what it's trying to base in. This is what I mean by basing. Once you get a third strike, right? Then it normally try to base in, but you started here, and if it holds back from here, that's when you got a buy point. But again, these are how much is this in pips? T3 112.59. Let's say 60. It came back, did 60, and then did 113. So it did actually 40 pips on a swing. This is what I mean. You probably would not know if this is the point unless you got a very smooth coming in trend line. Then you can take a fair guess. Otherwise, you'll get the impression when it starts basing in. You know. So this is where it's trying to base in. Because it immediately came back, right? Normally they deflect and then they came back. This immediately came back, hit it high, try, and I don't believe this candle, so I think, uh, yeah. So break on the higher side, goes on the higher side, otherwise it needs to come down one more time. So I basically on UJ. But what you're looking at is nothing more than breakout to breakout, breakout to breakout, breakout to breakout. And that's what's going to be your strength, right? It's not that if you spot it, and it's not that it needs to come in right there and then. Here, even this is a head and shoulder breakout, right? So yeah, it'll be an excellent thing if you can find the same price again back to here, because now you're not just working on support and resistance, you're actually working on patterns. Working on pattern gives you more sixes in terms of pip counts. So if it starts shooting on the higher side, you can start probably buying and looking for 113.60 zone, hit back here, start selling it. That's when you're looking for a euro fall down further up, and maybe a 109.20, 25 swing on that, some follow through. But knowing I don't know, Euro Japanese, I'm bearish, but when it comes down to Euro crosses, I try not to be so vocal on that. It's just that it is drastically slow and it can be painful. I'll be leaving now.
Okay.
This is something that you need to practice basically, and then you can start showing me. I mean, I don't mind having a look at it. So maybe I'm missing something. You can find some pair. Is that maybe even I can go and opt on trading those pairs. So yeah, it'll just make us all very proactive.
Okay.
So I'm gonna cut it out here. Uh, Good to have you all back, and then till next time, have fun, enjoy your weekend.
And
Good
you.
day, all.
Okay. Thank you very much. Really appreciate it. Bye
You're
for
welcome.
now.
No problem.
Bye.
Bye.